Okay guys, in this video I'm going to give you my personal swing trading model that I use and which I love, and I think this is the best swing trading model possible. And this is exactly what I do on a day-to-day basis. Day-to-day basis. This is what I'm looking at right now. I'm looking at GBP AUD. So this is the Great British Pound here against the Australian dollar. And what I'm looking for is, let me just get on a better broker. Um, let's go on forex.com. Essentially, what it is, what I'm really looking for, first of all, for this model, is I'm looking for the trend, the higher time frame bias trend, whatever you want to call it. And let's just get on the weekly chart very quickly. And the first thing I'm looking at is I just want to know the bias, right? And bias, trend, direction, whatever you want to call it, it's all the exact same thing. And run the weekly chart, and I usually I use the 4 hour chart on the daily, but I just like to look at the weekly chart occasionally. And the first thing I'm seeing is, you see this order block here. I always like to see price respect the direction that I want it to go in. So right here, I'm going to mark this out. Right here is an order block. And can you see, let's make this a bit bigger so it fills the entire order block. Can you see how we kind of wick into here? A few candles, we wick into here, and then we instantly shoot off. We instantly shoot off. You guys see that? Right? We wick into it, and we instantly shoot off on the weekly chart. On the weekly chart, so this is the higher time frame order flow. So this is telling me there's a lot of bullishness to this price action. Now I don't like this wick here, because this wick was on it was a news event with the Japanese central bank, which caused this liquidity to be taken out. Which ideally this liquidity would have been kept in place, but it wasn't. So it is what it is. You're not always gonna get everything you want in price action. And the second thing I'm looking at is, because on the weekly chart, this is the most recent relevant price action to me. Is I'm looking at this wick and I want to know where we went. And I like how we haven't touched this order block here. See this order block right here? I really like how price hasn't touched it, because that tells me that if price did this, yeah, okay, we're definitely bullish. We respect the order block, but we're so bullish that price came down and it couldn't even get to the order block. It had to quickly, like this, right? Quickly go in the opposite direction. It couldn't even get to the order block. And I really like seeing that, because for me, let me just remove this. Because for me, that's telling me that we're really bullish. Smart money or the higher time frame order flow, it's all bullish. It's moving upwards. And in terms of liquidity, we're on the weekly chart. So let's just go into the daily chart very quickly. So in terms of liquidity, the first thing I'm seeing, I'm sure you guys can see, which high or low are we going to go for? Are we going to go for this high, or let's say this low? But hopefully, clearly, it's very obvious we're going to go for this high here, right? We're going to go for this high here, and you know what would have been a bearish order block here. So last up close candle for the down move here. Right, let me just mark this up. You see how it's completely disrespected? Completely disrespected. Price closes into it. It wicks out of it. There's no respect whatsoever of that order block. No respect whatsoever. That is telling me that we're bullish. Right, we're not bearish, because if price did something like this, let's say it came up, tapped the order block, instantly went in the other direction. Well, probably not, probably not that extreme. But if it came like that, then I'd be like, oh, okay, maybe we are a bit bearish. Maybe we are going to retrace. But we've completely disrespected it. There's no respect whatsoever of any order block. And this is what you want to see for bias, right? If you're bullish, you want to see all bearish order blocks and all bearish fair value gaps get, violated, completely ignored, completely disrespected. And that's what you want to see. So hopefully it's pretty clear, right? We're going to go for this. We're going to go for this high. And yes, for the entry, we get onto the 4 hour. We get onto the 4 hour chart, and what we're really looking for is, we're just looking for an optimal trade entry. We're not trying to pick which fair value gap, which order block do we want. We're just looking for a simple optimal trade entry. And ideally, I like to see a liquidity sweep. A liquidity sweep, as you know, it's just when price does this. Let's say it does this. So you see this wick here. Remember, we're on the 4 hour chart. This is why I like the 4 hour chart, because every single candlestick is so significant and important. Here, there's a lot of liquidity. Lots of people have been buying GBP AUD, and they put their stop losses here. So price comes. You see how it wicks through it? It wicks through it, and it instantly goes in the other direction. Leaves lots of fair value gaps, all the blocks, all that good stuff. And if you wanted to, you could say, this could be your entry here, this order block here. You can try and finesse it, get tight stop loss, relatively tight stop loss, let's say, and target, whatever. But for me, I think it's so much easier to just get the Fibonacci from this low all the way to the high, like that, and then you've got your optimal trade entry, the 0.705 level. So let me just get the settings up here. the 0.705 level. We always enter at that level. And what you're going to do is you're just going to get your risk to reward tool, whatever you want to do, put it on this level, the 0.705 level. That's your entry. Stop loss at the low. Take profit. For me personally, for this model, is always a 3-to-1. It's always a 3-to-1 because I found that let's say you had your take profit here. I found that with price action on this time frame and for this model, let's say it did that and it took out the high. Very, very, very rarely would it like reverse on me and let's say not hit the 3-to-1, right? So if you put a 3-to-1 risk to reward ratio like this, right? So it's all the way up here. It's very unlikely in my back testing that price would come up, let's say take out this high and then reverse in the other direction. What normally happens is it either does two things, right? Either comes and it has a tiny little tracer and then goes down, right? And you're wrong. You're wrong. It's just the way it is. Or what could happen, and what I like to see ideally, is it comes and it just goes straight for it, right? It doesn't really take out this and then go the opposite direction. Sometimes it does. And for me, my rules are as soon as it breaks this high, my stop goes to break even. So it goes up like that, right? Now you could have your take profit here like this, and then you just get consistent trades. And the thing is, your trades will be done quicker, but you give up risk to reward in exchange for that. But for me personally, I would just aim for a 3-to-1. I would just aim for a 3-to-1, and yeah, you just keep your life simple. And this is exactly what I've done because this is, let me get up. This is live trading right now. This is exactly what I'm doing on all these markets. Exactly what I do every single day, every single week. This is my swing trading model. It's exactly what I'm looking for. I like how I've got the higher time frame order flow. I've got the direction with me. I've got such an easy, simple entry pattern. I'm not looking for anything crazy. You get around a 50% win rate and a free risk to reward ratio, which might sound like, oh, that's not good. Let me tell you something. That puts you in like the top 1% of traders. Puts you in the top 1% of traders. That can make you a millionaire. That can make you, 10k a month, 100k a month, pass any prop firm challenge. Yeah, that's all you really need, and it's realistic in trading, right? Realistic because you know it's very hard to get higher than a 60% win rate. It's very hard to get a 60% win rate in trading or above, and if you do, you're gonna have at most a 1-to-1 risk to reward ratio, or even less than that. Right? It's almost a negative risk to reward ratio, but a very high win rate to make up for it. Um, but yeah, this is what I'm looking for. This is how I do my analysis, and I'm gonna walk you through some other currencies that I'm looking at. So I was looking at GBP CAD. I didn't like how deep this retracement was, right? How deep this retracement was because it's almost close to this low, and we've taken out this high already, so there's nothing for me to see here, unless of course we get close to this high. So let me mark this out here, like that, right? Oops, like this. Now what I would like to see is price come up, make it clear to me that it wants to go for this high, and then retrace down here, and then up we go. That's what I'd like to see, but will I see it? Probably not. And yeah, let me just scan through a few pairs here. I think GBP NTD. Right, so here's another one very similar to AUD. I'm just going to walk you through the analysis again. So the first thing you want to do is you want to get on the weekly, I would say, or daily. It doesn't really matter. Let's make this a bit bigger. So I'm on the weekly chart here. First thing I'm looking at, this order block. So I'm looking at this order block right here. And I'm interested, and I like, well, I'm happy in a weird sense that price hasn't touched the order block. Right, it was so bullish that you couldn't even get into the order block. I really like that a lot. And there's this little gap here, so let me just remove this. There's this little volume imbalance, which I think we've briefly discussed, which is just a wick. The gap between two candles with two wicks. It's just a volume imbalance. It's essentially like a fair value gap. Right, price usually likes to come to it, but we haven't done it in this case, which for me I really like to see. I really like to see that. And yeah, let's get into the daily charts. I just want to read the order flow a bit better. Yeah, so this is something I didn't like. I don't like these equal lows. I do not like these equal lows at all. Right? I do not really like that. And ideally, price would have respected this order block and quickly gone off. But you have to remember this is a daily chart, so this is quite far back, and this is the most recent price action. Now, in terms of liquidity, let's say this is where we are right now. If you look to the left, where would you say price is going to go? Right? I hope it's pretty clear. This big wick here has lots of stop loss orders there. So right there, for me, is my drawn liquidity. Let's make it a bit bigger. So I'm bullish and I know what I'm targeting and how I'm going to get onto the 4-hour chart. And I'm going to look for an optimal trade entry. I'm going to look for an optimal trade entry, and I hope you can see, again, we've had our little liquidity sweep like this, like this, like that. Here it is. And let me just write out. There's your liquidity sweep. Ideally, I like to see a liquidity sweep because liquidity sweeps with any entry pattern, it just adds to the probability. Just adds to the probability. And yeah, and what you're going to do is you're going to get your Fibonacci from the low here all the way up to the high. You're going to put your risk to reward tool or your entry at 0.705 level, and then you're going to target a 3 to 1 like this, like that, right? Now I don't know if price is going to come down here. It might not do, but this is what it would look like in real price action for you. Real price action, like this. It look real price action like this. You see a retracement, and then you'd ride price up, or it could go against you. Well, that's what you would actually be looking for in price action. And I'll just give you an example of one that actually worked. So here's one that I didn't really, I didn't take this trade because I was already in a different trade on AUD CAD, but let's just mark this out. So here, let's say at this point, you run the charts. Right here, if you look to the left, you've got this liquidity here, right? These nice highs. Lots of people were shorting. Lots of people got their stop loss orders here. You've got your liquidity sweep here. So here's liquidity. Here's a sweep. Here's your swing. And what you're going to do is your Fibonacci from the low to the high. You'd aim for a free risk to reward ratio like this. And this isn't the best trade, but I hope you see it. And you will have examples like this, right? If you use this model, you will get trades where it just chops for a bit like this. Chops for a bit for like a week, doesn't really do anything, and quickly goes to your take profit. It's just the way it is. And yeah, there's an example there. And another one I'm just going to give you is on NASDAQ, right? There's another one I'm looking at right now. So I'll get NAS 100 up. Okay, so here's another entry on NASDAQ that I'm looking at. So let me just clean these charts here, and let's just get onto the weekly or daily chart, like this, right? So the higher time frame trend's bullish. Like it's pretty clear that we're going up, 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 and you can do this on the 4 hour, the daily, or whatever. Just zoom out and you can tell the trend, and even on the 4 hour chart. So let's get the 4 hour chart up, like this. If you zoom out, you can see the trend. The overall trend's bullish. We want to trade with the trend. We don't want to go counter trend. We don't want the shorts. We just want to go long, and we're looking for any opportunity to get long, right? And I'm looking at this price action. The first thing I'm seeing is you see this liquidity here. There's lots of lows here. I like how price has gone below it. It's gone below it, and it's tapped into these order blocks, these fair value gaps like this. Right, so this mess, right? So essentially these three candles together is like an order block like that. You see how we wicked into it, we've tapped into it, and we've instantly gone in the other direction. Now, this is just what I like to see personally. It's what I like to see, but the key thing that makes this model work is liquidity. So let's remove all this and let's look for any liquidity on the 4 hour chart, right? And here's the high, this high right here. So let me just make it a bit clearer. This high right here, there's lots of liquidity out here, lots of liquidity. I'm just gonna remove this for now, right? So if you zoom out, you can see it, or if you really wanted to, and this is probably what you should do, when liquidity is so far back, get onto the daily chart, because this is how I actually use the daily chart. The daily chart's a lot more obvious that this high is what we're going to go for than this one afterwards. And yeah, and then once you've got your liquidity, you get onto the 4 hour chart, and you can do the exact same thing. The exact same thing we've been doing. You take your Fibonacci from the low to the high like that, and from a 0.705 level, stop loss, which is, for this reason is right at the low, and you just target a free risk to reward ratio. A free risk to reward ratio. Nice and easy setup. Nice and easy setup. That's all you need to do. That's all you really need to do in trading. And if you've got a large watch list, this is such a good model, such a good, peaceful model. You can do it around work, you can do it around studies, and if you want to be a swing trader, this is the model. This is the model. You just want to find the trend. You want to look for the most obvious liquidity. You want it to be clear, overwhelming, and then you just set up your optimal trade entry. You set up your optimal trade entry, and you're done. And yet, this is a great model, and this model works. This model does work. There are people who have this exact trading plan who are making money with it. And I'm proud that they're making money with this. But this is such a good model. It's such a good model. They can fit it around their jobs. And personally, if I still had a full-time job, I would be a swing trader. I'd get comfortable with being a swing trader. Then I would go and be a day trader once. Let's say I'm financially free, right? I'm able to quit my job. I know what I'm doing with the swing trading. then I'd go and be a day trader, because day trading requires a lot more emotions. You've got to make decisions quickly under pressure. You've got to add time, bias, all that extra stuff onto it. And by bias, I mean session bias there. And yeah, I think this is probably I shouldn't say the greatest model, but I think this is probably the most simplest model in all of trading, right? After years of trading, after tens of thousands of hours of genuinely studying this, of failing constantly, non-stop, this is the model I've come with. And you know what? I'm happy with it. I'm happy with this model. But yeah, this is a great swing trading model. Feel free to use it. And if you've got any questions, please do let me know on Twitter or YouTube or my email, anything. And yeah, I'll see you guys in the next video.